Hey everyone, welcome back to my channel. It's Matthew Varga here. It's been a while since I've done a questions and answer video. Last time I did it, I think it was 6 months ago or so. I did one with Nicole. So if you haven't watched that, you go back, watch those ones. I think we've done 3 or 4 together. All great questions, a lot of great content in there. So make sure you go back and watch those after you're done this one. So I asked you guys on my Instagram some questions that you might have about investing or real estate or option trading, and I got a bunch of great questions, so I took some of the best ones that I could, and I'm gonna answer them in today's video. If you're not following me on Instagram or TikTok, you definitely should, because I post daily videos updating you on our financial journey, showing you different strategies and different ways that you can reach early retirement and financial independence. So make sure you go follow me on Instagram and on TikTok. The first question I got was, is it ever too late to start investing? The answer is no. No, it's never too late to start investing. The best time to start investing is today if you haven't invested tomorrow. So really, it doesn't matter what age you are. There's always a good time to get into investing and start working towards your financial future and your financial independence. Now, depending on the age you are when you start investing, you might have a different strategy that you're looking to use. You might have a different risk tolerance. You might be, willing to take more risk or less risk than someone else, depending on your age and depending on how far away you are from your retirement goal. But no matter what, it's never too late to start investing. Question number 2, how did you decide how much you needed to retire? So this is a question that I get asked a lot from people. Everyone wants to know exactly how much do you need in order to retire. And the truth is, there really isn't a one-size-fits-all answer for everyone. I mean, I know the financial industry likes to make it seem like you just need to save $1 million and then you can retire. But the truth is, the amount that you need to retire really depends on your monthly expenses. So someone who spends a lot less in a month is going to need a lot less money in order to retire. So one of the first things that you should do when you're trying to figure out how much you need to retire is really sit down, look through your financial statements, through your monthly bank statements, and determine where is your money going each month? What are you spending a lot of your money on? And then you need to try to figure out, okay, what can I cut costs here? What can I cut costs there? You also need to take a look and think, okay, well, once I retire, what expenses that I'm spending now will I not be spending anymore once I retire? So some things you might not be spending money on anymore could be your commuting costs if you're taking the train or driving to work every day. Dry cleaning bills if you're working in a professional atmosphere and you need to do dry cleaning every week. Any professional clothes that you spend your money on. All these expenses that you spend in order to work and earn an income, you're not going to have to spend that anymore once you're retired. So you're going to want to make sure that you take those expenses off of your budgeting amount when you're trying to figure out how much you need in order to retire. I actually did a video recently talking about how much you need to retire and how to calculate that amount. I go over the 4% rule, which is a pretty well-known rule that a lot of people look to when they're trying to calculate how much they need to retire. Another important thing when you're trying to figure out what you need to retire is also how much investment income you're generating. And a lot of that has to do with what type of investing you're doing. So some investments maybe generate a little bit of a lower monthly return than some other investments. So you're going to need to have more money put aside with those, lower return investments. Whereas if you were looking to do maybe something a bit more aggressive like private lending, where you're generating, 10 to 12% interest, or Airbnb arbitrage, you can earn a lot higher monthly income from some of those strategies, but they are a bit higher risk, they take a bit more work. So there's a bit of a trade-off there depending on what you're willing to do in order to sort of generate that passive retirement income or even active retirement income when it comes to, the Airbnbs or whatever. So depending on what you're investing in and what you're doing is also going to have a big impact on how soon you can retire and how much you need in order to retire. So if you want to know a little bit more about the private lending or the Airbnb arbitrage, I have videos on that as well to kind of break down, how you can generate income from it, how much you might need in order to retire based on that type of investment strategy. So I'll link those down below. Give them a watch after this so you can get a bit of a better understanding on, how you generate income from those and if it's a good fit for you. Question number 3 is, when it comes to private lending, do you need to declare that income for your taxes? So this is a good question to answer now just because I was just talking about private lending in that last question, but yes, any income that you generate from any type of investment, you do need to declare that to the government and pay any appropriate tax. If you don't, I mean, you can get into some big trouble from, CRA or IRS. So yes, income that you're generating from any type of investment, you're going to have to declare. Private lending is the same thing. Now, there is ways to defer taxes, or even some investment accounts you actually don't have to pay tax on that income you're generating. So for example, in Canada, you can do private lending in your RSP, your retirement savings account, or you can even do private lending in your tax-free savings account. So the good thing with that is you can actually earn and generate this monthly income from that type of investment, and it is tax sheltered. So with an RSP, you're gonna have to pay taxes when you take that money out, but with a tax-free savings account, you can actually earn that income, generate it in that account, and you don't have to pay tax on it at all. So it depends on where you live and sort of what your investment strategy is and your whole financial plan, but there is ways to do things strategically so you can reduce or minimize any tax you might owe to the government, which I'm a big fan of. The less tax I have to pay, the better. So question number 4 is where to start if you're thinking about buying an Airbnb in this market? That's a great question. With any type of real estate investing, obviously you want to make sure that you're investing in a city or an area that has a good economic foundation. So, there's good jobs in the area, property prices are going up, you've got an inflow of population and people coming in because that city's attracting more people. Obviously, the more people that you have in an area, the better it is for real estate prices. So regardless if it's a buy and hold or if it's Airbnb, you always want to have that foundation of good economics in that city or town, because that's going to make sure that the value of that property is not just going to drop. You want to make sure that you have the city that you're investing in has a lot of different companies and businesses, so that way it's not reliant on just one industry. Those are some major things to keep in mind when looking for any kind of real estate. Now, when it comes to Airbnb specifically, it really depends on what your strategy is for Airbnb as well. So are you in a tourist area like in Orlando or Vegas or Nashville, where the typical guest that you're going to have at your Airbnb is going to be, more someone who's there for like a weekend or for a week or whatever. So that's going to be a bit different than if you were to, say, have an Airbnb in a city or town that has a lot of schools, universities, or colleges, or big businesses like Google or Facebook or something like that, where there's a market for Airbnb for people who are going to be there for, a medium to long term, because they're maybe there as a student for a semester and they're just looking to rent a furnished Airbnb that they can go to while they're doing that semester at school, or for that business person, they might just be in town for a month working at that company. So depending on the type of Airbnb and what your strategy is, it's going to have a bit of an impact on what you're looking for in that type of property. So you need to know who your end customers that you're going to be targeting, so you can kind of pick and choose the right property that's going to meet the criteria that those people are looking for. So one thing that you can look to do also when looking for Airbnb in your area is to jump on Airbnb and look in your area to see what are the nightly rates people are posting. What does their occupancy look like? So if you open up their calendar, you can sort of see, is their calendar looking pretty full or is it pretty empty? And this can give you a bit of an idea on whether it makes sense to do Airbnb in your area. And if it doesn't, you can also look to invest outside of your city or town. You don't need to invest just because you live close by. So these are a few things that I would look at when looking at what type of Airbnb to invest in. Another important thing to keep in mind if you are going the Airbnb route is just to know what's your plan B, what's your exit strategy. So if we have another event like COVID, which recently happened, like that had a big impact on a lot of people's business who just had one plan for that property, which was I'm going to Airbnb it and make a lot of money. But you need to have that backup plan that what if something like that happened, or what if tourism started flowing out from that area because of something like that. What's your plan B? Can you do a long-term tenant and it's going to cover your costs still? Obviously the cash flow won't be as good, but can you still cover your cost of your property with a long-term rental. So you want to know, like have your backup plan in place just in case something happens. Or even if it doesn't cover the cost completely, is it just a little bit negative and maybe you're comfortable eating that cost because you're happy with that property and the long-term view for that area in that town. So these are just a few extra things to keep in mind when looking at any kind of property. Also, if you do want to know a bit more about Airbnb, I have a free guide I'll link down below. Plus, I've done quite a few videos on our Airbnbs, financial breakdowns, all that fun stuff. So you can check those out as well and probably give you just a bit better of an understanding about Airbnb and how it works. So next question, which is something that I get asked a lot, is if you have a tenant in a property who doesn't pay, what do? How do you get them out? So a lot of people, when they're looking to invest in real estate, I think we've all heard the horror stories of tenants who don't pay. They live in your house for months. Obviously, that's an extremely worst case scenario. So a lot of people who maybe don't get into investing in real estate because they've heard these stories and they get scared to invest in real estate. So let's just say, for example, you have a tenant that is in your place and they aren't leaving and they're not paying rent. Unfortunately, you can't just pull them by the ear, get them out of your house and get them out and move on. So you do have to follow, whatever the standard protocol is in your area. So here in Ontario, you're gonna have to take them to a landlord tenant board. You're gonna have to file them with a notice of eviction and then go through the whole landlord tenant board process, which is lengthy, timely. I would recommend, if you are going through that, it's probably best to hire like a paralegal, someone who is an expert in the eviction process in your area. It's going to cost you a bit of money, but the time and headache you're probably going to save is well worth it because you don't have to worry about your application getting rejected because you messed up on the paperwork. So hiring a paralegal who can help you build your case, make sure that you're doing all things the proper way, is a great strategy. If you are going it alone, make sure you're tracking everything that you can, all the notices you're giving, pictures, documents. The more proof you have about someone not paying or treating the property poorly, the better for you. The other strategy you could look to do is something called cash for keys, which is basically you have a bad tenant who's not really someone that you want there, and you offer them a cash payout to leave. So it could be a few $1,000s, could be $2, could be $5, could be $10. Basically, you're saying, I will give you this cash if you sign this form saying that you're agreeing to leave and you get out of the property. So that might be cheaper in the long run than trying to go through the eviction process and having someone live there and not pay rent. So just a couple of ideas in that case. Okay, next question. I think it might have been from the same person. They were just asking any tips to avoid getting a tenant who's not going to pay rent. So it sounds like they're having a bit of a problem with someone who's not paying rent, which hopefully you get that sorted out soon. But if you want to avoid a tenant like that who's not going to pay rent, it all starts from the beginning when you're going through the filtering process. Just some quick ideas. Make sure your property, when you're showing it, is in good health, good shape. It's fresh, it's clean, because junky looking properties are going to attract junky tenants. That's just how it is. You're also going to want to make sure that you're marketing the property at a good rent, because if you're lowballing your rent, you might also attract a tenant who's, not the best because they're looking for that cheap place to get into. So just making sure you know your market and you're pricing yourself accordingly, and you have a nice, clean, fresh, up-to-date property are two good things to make sure you're doing at first. And then when you actually have people filling out the application and looking through your properties, one thing to make sure is that they're filling out that application form in entirety. So if I get someone who's doing filling out the application form and it's only half complete, I'm going to assume that there's a reason that they're leaving stuff out, or maybe they're just lazy and I don't really want that kind of person in one of my properties. That's just me. So that's something you can also look for too. Any other red flags on the application, like mismatching information. So when you're looking to make sure you're putting in a good tenant, it really is that filtering process at the beginning that's going to have the biggest impact in the long run for you. So making sure that you check all the references on that application form. So landlords that they've stayed with. I mean, we've had dozens of tenants in our properties over the years. I've never once had a person call me to ask how a tenant was in one of our properties. And I just think we've had some not bad tenants, but not like the best. And I'm like, I probably would have said, I don't know if I'd rent to them again, but no one ever calls. So I kind of wonder, all these new places are moving to, these people aren't actually doing their filtering and doing their due diligence. So don't be that person. Like, call and check, make sure they're good. Same with when you're checking their work references. Like, don't just call the number that they put on the application. Like, go on Google, research the company, call the HR from that, and look to get redirected to the person on their application they say is the boss. That way you're actually talking to the right person, and it's not just they're putting their friend's phone number on, you're calling their friend who's giving you a good reference. Like, these things happen all the time. So that's a few things. Also, just do a deep dive on social media. Go jump on LinkedIn, see if the work that they say they work at is actually on their LinkedIn profile. Look for that boss who they put on their application. Make sure that their employment is that company as well. And then, try to find them on Facebook, Instagram, and just see what they're posting there. I mean, this is what I do. So if I see someone who's posting just a ton of pictures of them drinking, partying, smoking joints, I'm not going to let them into my property. I'll just ignore their application and move on. So just doing that little bit of extra work up front is going to have a huge difference when you're putting someone in. And then once you get all that checked out, run the credit. A lot of people don't want to run the credit because it costs money, but you can learn a lot from someone's credit report. So don't pull credit until you've done all those other checks first, because it does cost you money. So you want to make sure they're the top tier people that you're looking to get in your place. Then you run their credit, and then you check to make sure that like their credit's good, they're making their payments on time. If they're not paying their credit card bill, their phone bill, what makes you think they're going to pay you? So these are just a few things to keep in mind to filter out those potentially bad tenants. And I mean, we've had, like I said, dozens of tenants. We've been managing our own properties for quite a long time. And once we do that hard work up front, like, we've never had anyone not pay rent or miss out on things. We've had some people maybe late, but they always tell us ahead of time because we've built up that respect. So, make sure you're doing that extra work ahead of time. All right, next question is, what's the difference between getting a mortgage from a mortgage broker or just going directly to your bank? So normally it is a better idea to work with a mortgage broker, because a mortgage broker can shop your deal around. They can, usually they have access to dozens or hundreds of other banks depending on where you are. So they can actually put your application into a bunch of different banks, and they can also look to see which bank has the best deal, the best offer at that current time. So as we all know, banks usually put out promotions here and there where 1 month they might have the best deal in town, the next month they might not. So a mortgage broker can do that work for you, shop your deal around and find what works best. Whereas if you just go to your normal bank, you only get whatever they have at that time, and it might not be the best. So unless you have a good inside track with someone at a bank who's going to help you get a deal done that a mortgage broker can't get done, then usually you're better off to just work with a mortgage broker who can do all that heavy lifting for you. And the good thing is, a mortgage broker isn't they're not paid by you here in Canada anyways. Like, you don't pay the mortgage broker, the banks pay them to bring the business to them. So you're not paying any money, and you got someone doing that work for you. So really there's no downside for you. Next question is, can I do a step-by-step on options trading? I will do a video on options trading for people who follow me on Instagram. If you're not, you should be. But I've been showing people my options trading, how I'm using that strategy to generate, pretty good cash flow with the options trading. So I'm really liking that new investment strategy I've been doing. It's a lot to go over to try to do here in just a Q&A. So I'll start doing some videos just to, give you guys like the basics of option trading, how it works, what I'm doing. I do put that, like I said, on my Instagram, showing you my trades and, how much profit I'm generating from it. So it's definitely a really cool thing. I'm excited to be doing it. In general, I'm just selling options. I'm just selling naked put contracts just because I like to collect the premium. And if you're buying options, then you're more speculating, because you can only win with that kind of trade if the stock moves in the direction that you are guessing it's going to move in. Whereas when you're selling an option contract, you can actually generate that income from whether it goes up, down, stays the same, just depending on how you price your option contract. So I'll definitely start doing more content on that, because I get a lot of questions about it. People really like it. They see how much opportunity there is. And yes, it's a little bit more difficult to understand at first than, you know, just buying a stock. But once you understand the fundamentals of it, it's not really all that complicated, as long as you're not getting too aggressive or crazy with your stuff. If you're just doing, you know, good standard option trading, you can really use it to generate some pretty cool cash flow. Next question is, what type of property do you prefer to invest in? You know, single family home, condo, you know, multifamily. I mean, this question is really specific to like the town or the city that you're in, the price points. I mean, you know, all things being equal, I would always rather invest in a single family home over a condo, because single family home, I have more control over my investment. You know, I can add a basement apartment, I can, you know, paint it, I can do upgrades and do these other things to make it worth more. Whereas with a condo, you're restricted to what you can do. Also with a condo, you know, if I want to do Airbnb as my strategy, like the condo board can all of a sudden decide, nope, we don't want Airbnbs in this building anymore, and you can't do anything about it. So I like that, you know, single family homes can have more control over a condo, which when you have any type of investment, you want to have as much control as possible over your outcome. So yeah, in general, I would prefer that, single family over a condo. And then when it comes to single family homes, you know, typically this is all just general, but the more units that you can get, that you can afford to get, like the better off it's going to be. So if you can afford to get a fourplex over, you know, just a single family home, you're probably going to be in a better position because you got 4 units generating cash under that same roof. So those are just the general things I would look for, but like I said, it depends on where you live and the amount of investment that you have. I mean, if you're in San Francisco, it might be hard to buy a single family home for $2 million. So, you know, it depends on where you are and where you're investing. So the final question that I get asked quite a bit is, how do you find real estate deals? So just a couple of quick tips for someone who's looking to get started into real estate investing. First off, you need to work with a good real estate agent. You want to deal with a real estate agent who focuses on investment properties in your area. Ideally, someone who invests in properties themselves, so they're not just talking, but they're actually walking the walk. So, you know, find a good investment focused real estate agent in your area. Get on their email list so you can start seeing what kind of properties they're putting out there, how they're working, what the prices are. You know, get some tours, go walk around, see what your money's going to get you. Another good idea is to go join a real estate investing group if you have one in your area. Most places do nowadays, you know, and get out there and like talk to people, see what's working. What are other investors in your area doing? What are they buying? What kind of cash flow they're generating? Sometimes you go to those and you're going to find people who need to unload some properties because maybe they're retiring or they're looking to upgrade to different types of, you know, investment properties. So you might be able to find some properties through that network. And then lastly, if you're good with your hands, if you're a bit of a handy person, you could look at getting on any wholesaler email lists in your area. So typically a wholesaler is looking to find, you know, cheaper fixer-uppers, get them, you know, locked in privately and then resell it to someone else with a bit of a spread and a profit. So if you're handy, you're good with your hands, you can do a fix and a flip, then getting on a wholesaler email list or a bunch of wholesaler email lists in your areas gives you another opportunity to find off-market deals that you might be able to then buy, you know, do some sweat equity and turn around, flip that for a profit, or just keep it in your portfolio. So there's a couple of ways that you can find some, you know, good real estate investments in your area. Okay, so that is all the questions I'm going to answer for now, because I think I rambled on a bit for some of them, so it's probably a long video already. But if you have any specific questions for yourself that you want me to answer, you can either, you know, message me on Instagram, you can leave a comment down below in this video, and I'm going to do my best to get there and answer all the questions that you have. You know, maybe if your question might require a longer answer, maybe I'll do another Q&A in the future. So I'll just save that question. I'll let you know that I'm saving that question, then I'll do a video on that. Or I might just make a whole video based on some of your questions. So if you got some really great questions down there, you know, probably help me make some new cool content for you guys. So leave any questions you have down there. Give this video a big thumbs up, and I will see you guys in next week's video.